head of energy research at EcoBank Group. Dolapo, good morning. Thanks for coming through.
Good morning, Bolton. Good to be here.
Yes, thank you. Thank you very much. I'm sure you, whatever, social media, yesterday, Sunday, the NLNG released a statement saying, look, we've got to cut staff wages because gas revenue, our revenue from exports, sales, whatever you call it, is down 60%. That's some pretty bad news at Nigeria's underbelly.
I totally agree. And I mean, we discussed this as well. Because if you look at it, really, what's happening globally, who is the gas going to? Gas is really going actually to Europe and to Asia. And if you look at both regions, they are going through some really tough times. Europe is still not yet on its feet when it comes to economic recovery there. And Asia at the moment is also wobbling a bit because of China, which is having some sort of restructuring going on in its economy. As a result, the gas consumption we had expected to see growing significantly from China hasn't really happened. In fact, most of the cargoes China bought, they are reselling back into the market, depressing prices further. So that's affecting the NLNG, and they are having to take this decision because of that.
Well, we've gone through some of this conversation before, but let's reopen it in a manner of speaking. Should the Nigerian government sell some of its holdings in LLNG for cash?
That's a dicey one, because to be fair, if you look at the last 2 years, or since the new regime came in, the new government came in, NLNG has actually been very key to supplying them with dollars and revenue to actually augment the budget at some point. In fact, I remember in 2015, it was the energy dividends that came in at the point to actually provide some revenue buffer for the economy. And
yes.
The same happened again this year. So
yes, that was about $1.8 billion, something close to $2 billion, that was.
Exactly.
So right now, you think, Dolapo, I'm going to cut in there respectfully. Do you think that figure is now being threatened because the NLNG itself says, look, revenue is down 60%. The Nigerian government is a shareholder in the NLNG, even though that was its business initially, but there are others involved in that deal. So part of the federal government is the 60% haircut that is now taking place from the revenue side.
Exactly. And I mean, that's expected, because we sort of said it that with oil prices going down, definitely gas prices were also going to suffer at some point. So we expect that, of course, if we did 1.8 billion earlier in the year, I can guarantee you that we definitely won't be doing the same figure next year when it comes to dividends. That 60% decline will be evident then. It may not be the best of times to sell out, because even if you were trying to sell out of the LNG, it would be you get a very poor valuation, because that would be the current gas price be factored in. In my opinion, LNG is also one of the best functioning JVs that the federal government has. So they should rather do everything they have to stay in the LNG and see if they can even improve the output from the LNG. We should be pumping more gas. We should be exporting more gas.
Now, how do we compete with major gas countries, producing countries like the folks in the Middle East, our friends from Algeria, Morocco, to the north of the continent? I guess we lost Dolapo Oni, the head of energy research at EcoBank Group, discussing the state of the NLNG and the news over the weekend that the organization, one of Nigeria's cash cow, says its revenues down 60% and that staff salaries is being shaved. That is the conversation. That was the news over the weekend. But we got Dolapo back for about 1 or 2 minutes. So Dolapo, sorry, we apologize for that breaking transmission. Could you please go on from where you finished off? The key question is if the government is going to sell down on LLNG to be at a bit of a discount to the downside, right?
Yes, and
now how do we get competitive? Let's spend 2 minutes together. To give us your 2 minutes. Fantastic. How do we become competitive like other major gas producers in the Middle East and north of Africa?
First of all, the first thing is we need to sort out the domestic market. Look, we need to make the domestic market, we need to sort out the commercial terms for the domestic market. There is enough gas demand locally in Nigeria. Look, we're looking at a lot of manufacturing companies, even Dangote Cement, they are looking at coal, they are looking at other options. Why? Because they are not able to get consistent, reliable gas supply. If we can sort out the domestic market, there is a significant amount, I can say roughly about 3 billion cubic feet of gas daily in terms of consumption that is effective, that is available locally. So LNG is only one of those options. The next thing we can also look at is how to even send more pipe gas to the rest of the region. Yes, Ghana has not been a very effective customer in terms of paying for the gas they buy, but there's huge demand in Ghana, there's huge demand in Cote d'Ivoire as well, which they are willing to pay for. So those are the three areas I think we need to pay attention to. The export is one part, and it's very key. Pipe gas is key, but more importantly, the domestic market should be the bulk of our focus.
Dolapo, you and I know that the price of gas globally is more expensive than the rate at which Nigerian manufacturers would want to buy it, about $7.32 per metric cubic feet. Then locally, folks want to pay 2%, $2 or $3 or $2.5, $2.50 for the gas companies or for the power companies who want this gas. So LNG would rather sell to the outside than within.
I totally agree with you. For NLNG, because of the processing cost, and for it will be more expensive. But I'm talking about the fact that even the domestic gas, I'm talking about dry gas now, not even liquefied gas, which before it's converted into NLNG is a lot cheaper. The domestic consumers in Nigeria are also paying those $7 without complaining as well. I can tell you the fact that commercial terms for non-power, but companies that are not power companies, that are not government regulated, they pay a higher gas fee. I mean, even some of the IPPs that have been built recently, Azura and the like, they are paying prices above $3 as well per 1,000 cubic feet. So companies are actually willing to pay those prices if they can get reliable gas supply, because it's still cheaper than coal or any other form of power they invest in.
Okay, Dolapo, let's leave it at that because the conversation will continue. Last week, the manufacturers said they want to pay Naira for the gas they get. They don't want to pay in dollars. That's another different conversation entirely.
Exactly, that's another conversation.
Because they're looking at the Naira decline massively against the dollar, and they're saying, look, if the gas was processed from Nigeria and our extractive product here, why should we pay foreign currency for a local product using locally? Let's keep that conversation. Let's keep it there for another day. Thank you very much, Dolapo Oni, head of energy research at EcoBank Group.